Hey guys, Spencer from Wealth Hacks. This video is all about what I'm buying right now. Okay, so we are 2 weeks into this crazy coronavirus-induced recession, or whatever you want to call it, and stocks are on sale. So I've waited till about now to start, I guess, dipping my toe in the water, and we're going to go over on screen what I'm dipping my toes into, where my purchase points are, and why I'm making these decisions. So first one, let's dive in. Restaurant Brands International. Okay, so I actually owned a little bit of this before everything went crazy, so lost a little money on this, at least as at this point. But Restaurant Brands International, okay, is names you've heard of. It's Burger King, it's Popeyes. It's basically a company that holds a bunch of these big restaurants that you know and have heard of many times. And you can see here it hasn't been around crazy long, but the reason I like it is it's been pretty steadily. It's had like some bad bouts in there, but it's been a pretty steady increase. Okay, since it started, and because of where it's at right now, the dividend is awesome. Okay, so it's got a 7% dividend at today's prices, and it's very, very likely to recover very, very quickly. Okay, so as soon as this, all these lockdowns and things die out, it's very likely that people will head back to Burger King and they'll head back to Popeyes, right? Like that'll click back pretty quick. And so you'll see Restaurant Brands International, at this point you can lock in a 7% dividend, and you can get that growth that'll come pretty quick once the economy gets going again. So the code for Restaurant Brands International, it's QSR. Yeah, QSR right here. And that's probably the number one thing that I'm getting to right now. I love the dividend growth potential there. So number two, Delta Airlines. Okay, this is, I had some Delta Airlines stock before everything went crazy as well. And there's a lot of like fear and panic going around the airlines, but they're another one that I think will pick up in almost the snap of a finger once they get the okay from governments and things like that we're probably safe to travel. And they've said right now estimates are June or July or something like that. Airline stocks will bounce back pretty quick. And of all the airlines, Delta's always been my favorite. They're both on the customer side. I think they're beyond what the other airlines are doing for their customers, and just in terms of general company stability and management, and just a lot of good fundamentals for Delta. And Delta, same thing. You've got this crazy dividend of 7.5% right now because of how low they are, and so you can lock in that rate. And then when Delta starts to make that bounce back, right? You look at this chart here. When Delta starts to make that bounce back up to the 30, 40, 50, 60 level, you've locked in that 7% dividend, and you're growing with it. Okay, so you've got this great dividend growth potential once again, meaning you can make dividends, at 7% of your initial investment, and also be growing your stock. You can see it right now. Like Delta is selling at rates that it's basically started at, but the last time these rates were seen were in like 2013. Okay, and Delta has grown a ton since 2013. Number three, little outside of things, and I'll probably take some flack for this. I think gold is a great investment right now, okay? I owned some gold before everything went crazy. I own some gold now. If you look at gold, while it's not exact, gold tends to be a good hedge against inflation, right? As we get a ton more money in our monetary supply, then the value of gold tends to pick up. And while it's not always true, that tends to be true. And if you look at the last crisis, the price of gold dropped during the last crisis, and this is in 2008 or so. And after the crisis ended, so maybe October 2008 or so, gold just exploded. Okay, so the company that I'm buying in, it's a gold miner in Canada. It's BTG, BT Gold Corp. And not a lot in terms of dividend, but I think gold is going to be a great thing to hold on to once the economy picks back up and that $1 trillion stimulus kicks in. And I think we'll see some inflation there, and we'll see some really good returns on gold investments. So while gold isn't, I'm not going like huge into gold, but I think it's a good piece of your portfolio in terms of like 5% or something like that. Okay, actually we're going to do this one next because Foot Locker will be my last one because it's kind of my least favorite. I almost should have started with Disney because Disney is awesome, and here's why Disney's awesome, okay? Disney owns assets, okay? So Disney owns assets, things that just generate money that they already own, okay? All their parks and all their stores and all their movies and Disney Plus, right? Those are assets, and the instant things kick back into normal, these assets will kick back into the stage where they basically just print money, and people are not going to stop going to Disneyland forever. Okay, like that's, even if the virus did last in large scale, past 3 or 4 months, I believe that people will kind of get sick of it and just say, screw it, I'm just going to live with this virus situation. I'm going to go back to Disneyland. So I think Disneyland will be a quick recovery, and in terms of assets, nothing has changed. Disney still owns all the assets that it owned, and once the economy gets back where people are buying things again, it'll kick right back into place. Those assets will kick right back into making money, and the stock will bounce back. I honestly think Disney will be one of the fastest bounce backs to its pre-recession or pre-coronavirus prices. Dividends, not huge, but if you look at the chart here, too big of a chart. We'll go 5-year. You can see that Disney has dropped to its lowest point in 5 years, okay? And Disney's assets, right, which are its true value, the things that generate money, those are at an all-time high. They still have all those assets. So anyway, love Disney. Crazy that it's at these prices. Probably the number one thing in terms of what I'm going to fill my portfolio with. And let's do the last piece here. That one is Foot Locker. I've watched Foot Locker for a while. Shoes, if you're familiar with that, it's a pretty staple product. They've had good growth. What I really like though is they've dropped so low that their dividend here is at 7.5%. So once again, I think Foot Locker is going to be a quick recovery. People are going to go back out. The economy is going to get going again. We'll see companies like Foot Locker that are kind of retail and lower end retail. They'll do just fine. They'll pick right back up, and you can lock in this 7.5% dividend as well as get some really good growth once things recover. So those are my 5. Now, if you're still watching, I want to talk a little bit about how I'm what price points I'm buying into these. Okay, so I am very much looking at charts, and if you look at charts, you can see patterns. Foot Locker is probably not the best example. Maybe we can hop into like Delta here. Delta was my second one, right? You can see a trend line coming from here, and I won't draw one on the screen here, but you can see a pretty good trend line, and I think it hit right about there. So Disney Delta has chopped through a trend line, but it's pretty close to that trend line. So I buy as soon as I see it hit a major trend line, and then I start doing what's called averaging down. Okay, so with Disney, I think I have buy orders at 22. I probably have buy orders at 20, buy orders at 18, buy orders at 16, and basically I just keep buying as it drops down. I'll buy a little bit more and a little bit more. If it starts to go up, great. I now own 10, 20, 30, 100 shares of this stock that's going to make me money. If it keeps dropping, great. I'm getting better and better deals, right? Because I still believe that the fundamentals of Delta Airlines have not changed, and that within 6 months everything will be back where it started. So I'm doing that with all of these. I'm buying right about today. I'm starting to buy in pretty good, and then I'm setting buy orders. You can see I use TD Ameritrade. I'm setting buy orders. Every 10% drop or so, there's another buy order that comes in, and buys just a little bit more of that. Okay, and to me, the fundamentals on none of these companies is changing, and that means that if the economy recovers quickly, which current estimates say that it probably will, then you will see massive growth on these purchases in the next 6 months to a year. So if you've liked this, if you've learned something, if there's any, you found a stock that you didn't know about before and it helped you, please give me that subscribe. That's how we make our money, and I appreciate you watching. Thanks for watching WealthX.